So let's jump right into the tax return. Let's look at the 1040. The 1040 is basically 2 pages, the first 2 pages of the tax return. You might get a lot of other garbage before you get to the tax return, but the 1040 is what is sent over to the IRS. That's the nuts and the potatoes and the main course of the tax return. Okay? So the tax return again is 2 pages. Now let's just talk about the general information, just the general information. The first thing that's going to be on the tax return is the filing status. What is your filing status? Is it single, meaning you're unmarried and you're basically, by yourself, single. Next filing status is married, filing jointly. You have a husband, wife, 2 people are filing together. All right, that's the best scenario you can be in as far as tax rates are concerned. The tax rates are better for married filing jointly. That is the best status that you could possibly be in. I'm not advocating you get married just for the tax breaks. I would never say that. Just go with the flow. You in love or whatever, you're trying to get married, well, go get married, but don't get married just for the tax breaks. It's not worth it, trust me. Next filing status is married filing separately. This is the worst category that you can be in. Most of your benefits go away if you filed married filing separately. You might have heard me talk about this in other videos. We have to rethink about married filing separately and why they're taking away so many benefits if you're married filing separately, as though things get easier for you when you file married filing separately. That's not true. Things get harder for you if you separate. You might need those tax breaks. So again, I hope we can change those laws sometime in the future. These things are based on stuff that existed a long time ago, but we got to rethink all this stuff now. So the last filing status we're going to talk about is qualifying widow or widower. So if you had a spouse that died, you can actually file a tax return 2 years with your spouse, your deceased spouse, for 2 years, and then you have to do it you have to file their information through the estate. So you got 2 years, and you would be a qualifying widow or widower. So that's the top part of the tax return. So that's not overly complicated. 4 different filing statuses, generally 4. In order to be head of household, I don't think I mentioned head of household. Head of household, sorry about that, guys. Head of household is when you have a dependent and you are the head of the household. And let me be clear, just because you have a house and you don't have children, and you are the head of the household, that's not what the IRS is talking about here. You got to have a dependent in order to be head of household. So those are the filing statuses, okay? The next thing is your general information. Make sure this is correct. I think you should know what this is. This is your name, address, your current address. I get this question all the time. Which address is this? Is this the address that taxes are being taken out of, or is this some other type of address? This is the address where you want your mailings to come to. That may not be the home state in which you worked in, right? Because you might have lived in, say, DC, and you worked in California, for example, right? If you are spending most of your time in Maryland or DC, well, you want your mail to go to Maryland or DC. So, and then if you switched, you might have lived part of the year in Virginia, part of the year in DC. It's the address. The address that's on the top of the form, the 1040, is the address where you want the IRS to send you mail, or the taxing jurisdiction to send you mail, right? It's a forwarding address. Just look at it that way. Keep it simple. All right. Next thing, standard deductions. They're trying to figure out in this section, can you be claimed on another tax return? Because if you're going to be claimed on another tax return, you're going to check the box, and then they're going to check to see whether you're actually claimed on another return. So this is just a small little section on the tax return. Don't get freaked out about it. It's just asking, can you be claimed on a tax return, or can you not be claimed on a tax return? Just a small section. Don't get freaked out over it. Dependents. Here's another section here that we get a lot of questions on dependents. First of all, what makes a dependent? A dependent could be a child, it could be a niece, it could be a nephew, it could be a grandfather, a father, a mother. I think it's more like it's not the Holy Trinity. It's just anybody that's above you, your grandparent, your father, your mother, grandparents, anybody on the side of you, sister, brother, and then you got other types of relatives like grandchildren, children, niece, nephews, so forth. All of them can qualify as a dependent. Now you might have a dependent that doesn't fall under the relationship test. And those dependents, you have to show that you provide over 50% of the support for that individual. It might be, a friend of yours or whatever that's disabled, or just a friend or a child that you've taken up on. You got to prove that you provide over 50% of their support in order for them to be claimed as a dependent. You don't need to claim it on the tax return. Don't get it twisted. But if you ever audit it, you have to prove that you have actually provided over 50% of the support. Most of the time, you don't get challenged on this, but just keep that in mind. So, those are the four general areas at the top of the return. So once you get that return back, once you look at your tax return, make sure all the stuff at the top of the return is correct. Very, very simple stuff. Let's just keep it simple, okay? So, catch me out on my next video. I'm going to get into the income, and this is where the real juicy stuff starts to happen. The income. This is where the real magic happens. So, catch me on my next video. Click the link below. We're good?